Tonight, we are looking at the U.S. mission to guide ships through the Strait of Hormuz and what it means for war risks, prices, and the growing price tag of the Iran war. New pressure on mortgage rates and housing costs are here at home, and a quick look at other stories shaping the safety and everyday budgets. Hello, my name is Jared Uraine, and this is The Spectrum, where we walk through today's most important news with facts first, human meaning, and why it matters for you in your life. Let's get started. Thank you so much for tuning in. My name is Jared Uraine, and this is The Spectrum. The Strait of Hormuz. Why a narrow stretch of water matters to families and thousands of miles away. President Trump says that the United States will begin guiding ships belonging to countries not involved in the war through the Strait of Hormuz after a series of attacks and near misses in the area. U.S. officials say that Iranian forces launched missiles, drones, and attacks from small boats toward American and commercial vessels, and that U.S. helicopters and ships destroyed some of the attacking aircraft. They also deny claims that a U.S. warship was hit, saying all American vessels remain operational. At least 2 other commercial ships were struck in or near the strait over the weekend, though all crew members were reported safe. Insurance and shipping costs in the region are rising as companies reassess their risks. What is the human meaning about all of this? Well, the concern here is that decisions about a narrow shipping lane are now directly tied to the safety of thousands of sailors, and the cost of fuel and goods for millions of people who have really no say in this escalation. Now, why does this matter? Well, first, about 1/5 of the world's traded oil normally passes through the Strait of Hormuz. So every attack, every escorted mission or blockade, every threat can push fuel prices up. Now this translates in higher gas prices, groceries, and even shipping costs. Second, when the U.S. commits to physically guiding ships through contested waters, it reduces the chance of commercial losses, but it also increases the risk of direct clashes with Iranian forces. This raises the stakes for miscalculations on both sides. Third, families far from the Gulf. The impact here is less about maps, but more about whether this mission stabilizes the area or if this becomes another long, open-ended security commitment that keeps pressures on prices and, of course, the federal budget. Fourth, different outlets are framing this as either a necessary show of strength, a dangerous escalation, or a simple continuation of U.S. security guarantees. Watching what facts they highlight and what they omit can help you see the frame, not just the footage. Finally, in the coming days, watch for concrete signals whether attacks on ships actually decrease or whether insurers lower or raise their risk premiums, and whether any new talks are scheduled. Those details will tell you more about the day-to-day. Those details alone will tell you more than the day-to-day political soundbites. Iran war. The cost of the Iran war now passes $25 billion. A Pentagon official now estimates that the war in Iran has cost the United States around $25 billion over roughly 2 months, in just roughly over 2 months. Much of this has been spent on munitions, operations, and equipment replacements. The figure was given in testimony before Congress as the administration considers asking lawmakers for a much larger supplemental spending package, potentially up to $200 billion. This is to cover ongoing operations and replenish weapons. Officials here stress that no final decision has been made on the exact size of that request, and that the cost estimates could grow if the conflict drags on. What does this matter to us? Well, the concern here is that vast sums of public money are being committed at high speed, while the long-term trade-offs for schools, infrastructure, healthcare, housing, debt, all of these are much more visible to the people who are paying the bill. And why does this matter to us? Well, first, $25 billion. $25 billion in a few weeks is not abstract. It's roughly the size of a major city's annual budget. And it's being spent largely on weapons and operations rather than on long-term investments back home. Secondly, if a much larger war funding request moves forward, lawmakers will have to decide whether to raise overall spending, cut other programs, or increase borrowing, or some mix of any of these. Every single one of these options has downstream effects on interest rates, inflation, and public services, things that you and I need every day. Thirdly, when war costs are treated as a must-pay or domestic priorities as negotiable extras, it can quietly shift the baseline of what feels politically realistic on housing assistance, childcare, disaster resilience, and other support measures that matter to everyday stability. Mortgage rates edge up again. In the middle of all of this that's happening in the Middle East, mortgage rates are actually climbing again. Despite anticipation and expectation for rates to go down, recent data has shown that the average 30-year fixed rate mortgage is now around 6.2%, with a 15-year loans in the mid 5% range. Many adjustable rate loans are just above 6%. Rates are still below some of the recent peaks from the last tightening cycle, but they are clearly trending higher again as markets respond to inflation concerns and global tensions. What does this mean to you and I? Well, the concern here is that for buyers and owners who are already stretched, even a small rate increase can be the difference between a stable payment and having to walk away from a home or a neighborhood or a long-planned move. Why does this matter for us? Well, for a typical home, a move from just under 6% to just over 6% can add hundreds of dollars a month to a new buyer's payment. Over the life of the loan, that adds up to tens of thousands of dollars in extra interest. Second, higher rates shrink what buyers can afford. Now this means this can slow sales in many areas, put pressure on certain price ranges, and make it much harder for first-time homebuyers to get in at all. Third, owners with adjustable rate mortgages or those hoping to refinance into a lower payment now face a tighter window. Timing and loan terms matter more than ever, and it becomes critical to work with lenders and advisors who are transparent about options and risks. Fourth, while some news coverage treat rate moves as purely market noise, they're also tied to policy decisions about inflation, war costs, and financial stability. These same forces that are shaping the headlines are also shaping your monthly payment. Finally, if you're a homeowner or a buyer, watch 3 signals over the next few weeks: the path of mortgage rates themselves, any change in local inventory, and how quickly well-priced homes are going under contract. Those indicators together tell you more about your local market than the national averages alone. Inflation is easing, but affordability is still strained. A recent report showed that a key U.S. inflation measure has fallen to its lowest level in nearly 5 years, thanks in part to slower rent growth and earlier declines in gas prices. At the same time, the cost of basics, including food, fuel, and rental apartments, remains roughly a quarter higher than 5 years ago, leaving many households still feeling squeezed, even as the official inflation rate slows. How does this affect us? The concern here is that averages can say inflation is easing, while many families still feel they are running in place or falling behind, feeling the pain, because baseline costs of simply staying afloat has never really dropped back down. Now, why does this matter? First, for households, what matters is not just the rate of change, but the new normal level. If your rent, groceries, and gas are up 20% or higher than they used to be, well, it's a slow rate of increase just doesn't feel like relief. Secondly, for policymakers, there is a temptation to declare victory once headline numbers improve, but ignoring the lingering affordability gaps, these can deepen frustration, distrust, and especially among renters and low to middle income workers, just even more distrust. Third, for you as a viewer, take the following key questions. Has your income kept up with your core expenses? And if not, what adjustments in housing, commuting, or work are you being quietly forced to make? Fourth, as news outlets differ in how they tell the story, some headlines show the good news of slowing inflation. Others, they're going to focus on the hardships. The fuller picture here usually sits in between progress on the rate and the persistent pain on the level. Finally, over the coming months, watch the paths of shelter. Watch the paths of shelter cost in data, not just overall inflation, because rent, mortgages, and utilities are often the biggest swing factor in whether a budget feels sustainable. Well, that'll cover it for this episode of The Spectrum. And we really want to just highlight our goal. Here is what's simple. It's what's happened. We separate what's confirmed, and identify things that are still unclear. But more importantly, we want to connect the human impact, how it helps or hurts you based off of what's being said in the news. There's no partisan jerseys and no outrage performance here. As you see the coverage today, notice who explains the consequences for your life and who mostly keeps score on one side or another. This affects you and your decisions every day. And the more that we demand clarity, honesty, and basic respect from our information sources, the harder it becomes to sell us spin. I'm Jared Uraine with the 5 Diamond Group, and this is The Spectrum. Be kind to each other, ask for evidence,